Hello, good morning, and you're watching Market Cafe with me, Vinny Motiwala. Along with me is Sneha Shadwell. Sneha, a very good morning to you as well. Yesterday, yes, Nifty tried touching those all-time high levels, but after that, by the end of the day, we closed in the red. Just started seeing a fall coming in post that. But today, what are the global cues indicating anything positive coming in from the US market?
Absolutely, Winnie. Good morning to you as well, and good morning to all our viewers. Well, the US markets were closed yesterday on account of Juneteenth, but stocks futures ticked lower on Monday evening as investors looked ahead to a holiday week of trading because yesterday was an off. Futures tied to the Dow Jones Industrial Average slipped 0.3%, while S&P 500 futures pulled back 0.2%, and the Nasdaq 100 futures also nominally declined. Markets were closed for the regular trading session because of the holiday, and investors are coming off of a strong week, even as the major averages had slipped on Friday. Now, the S&P 500 and the Nasdaq Composite posted their best weekly performances since March, with the broad market benchmark rising 2.6% and the tech-heavy index adding 3.25%. It was also the S&P 500's fifth positive week in a row, a first since November 2021, and Nasdaq's eighth consecutive positive week, a feat it previously accomplished in 2019. So now, will Wall Street be able to sustain this rally this week? All eyes will be on that. But let's quickly go across to Europe then. And European markets fell at the start of the new trading week as investors remained jittery over the new economic outlook. The benchmark stock 600 index closed 1% lower on Monday, with almost all sectors in negative territory. Now, chemical stocks led losses down a whopping 2.8%, Winnie, and while banking stocks ended just above the flat line. Construction and material stocks fell 2.5% amid warnings of a looming UK mortgage crunch and a dip in house asking prices. As figures showed, the average rate of a 2-year fixed rate deal crept over 6% for the first time since December. Now, the Bank of England will announce its latest interest rate decision on Thursday, along with the Swiss National Bank, so all eyes will be on that. So, mixed handover coming in, US being short, but the futures doing nominally okay, and a slightly negative handover coming from Europe, Winnie. But this is what the global handover looked like in terms of equity markets. Why don't you take us through what crude did and other commodities did yesterday?
Absolutely. Looking at the crude prices as of now, overnight it fell in trade. We saw the WTI Brent of crude oil prices falling because of the uncertainty that is there in the Chinese economic growth. But as of now, seems like crude has become a bit more on the uncertain side. It's not a sharp fall anymore this morning. We're seeing it down by almost just 0.2% in trade. Brent crude oil trading around the $75 per barrel mark, actually more near the $76 per barrel mark, while WTI crude oil is near the $71 per barrel mark. Now, obviously, these mixed cues are coming in as in terms of the Chinese lending rate, which is obviously, let's not forget, one of the key economies in terms of the crude consumption. That is a bit of a worry there because we are seeing some signs of a slowing recovery that is coming in there, and that is a factor that is keeping the crude prices a bit subdued in trade even today as of now when you're looking at it. So that's the word coming in on crude. But let's look at what in terms of gold prices are doing. Gold is trading at $1,960 per ounce mark, ticking a bit lower this morning as well, down almost 0.5% as traders are assessing what would be the Fed's rate trajectory going forward. So on the back of that, gold prices too a bit subdued in trade this morning, staying here.
Absolutely. Now that we've had the handover on what commodities and equity markets did, let's quickly go across and see all the cues that you should be keeping on your radar today. On the global front today, China loan prime rates will be announced, an important figure to watch out, so keep an eye out for that. On the Dalal Street front, corporate action, you have Blue Star, which will trade ex-bonus today in the ratio of 1:1. Jindal SAW will have its annual general meeting today, and HMA Agro IPO will open today, so keep an eye out on that. Among other events, you've got PM Modi, who will begin his state visit to US and Egypt from today to the 25th of June. And auction of assets of bankrupt retailer Bed Bath & Beyond will take place today if rival bids materialize. So these are all the important cues that you should be keeping on your radar today.
Okay, moving on from cues to what the top global news flow is coming in overnight, and let's start and talk about the meeting that the American Secretary of State Anthony Blinken, who met with the Chinese President Jinping, and this is the first of a kind since 2018. The agenda of this meeting was to keep a check on issues between Beijing and Washington to avoid any conflict. Now, Xi Jinping also said that this high-stake meeting was important as the world needs to see a stable relationship between the two countries. Blinken also met to the Chinese foreign minister and top diplomat as well as a part of his two-day visit to China. This meet is set to facilitate a summit between President Joe Biden as well as Xi Jinping later on this year.
And in the latest we are tracking this morning for you, international multinational tech giant Intel will be pumping in as much as 30 billion euros to develop 2 chip-making plants as parts of its efforts to expand its Europe footprint. Sources suggest that Berlin has agreed with subsidies worth nearly 10 billion euros with the US chip maker. This is more than the 6.8 billion euros it had initially offered Intel to build 2 leading-edge facilities in the eastern city.
And meanwhile, Warren Buffett's Berkshire Hathaway has wholly owned subsidiary National Indemnity Company has increased stake in 5 Japanese trading firms to average more than 8.5%. Now, the companies involved are Itochu, Marubeni, Mitsubishi, Mitsui, as well as Sumitomo are some of the names coming in there. The aggregate value of these interests surpasses that of Berkshire's held stock in any country outside US.
Shifting focus then, and the International Monetary Fund is working on a platform for central bank digital currencies, or as we know it, CBDCs, to enable transaction between countries. The said setup will ensure interoperability of settlements between digital currencies issued by national central banks. Such a platform would avoid an underutilization of the so-called CBDCs, the IMF has said.
Okay, and let's move up and get some update on the startup world. And coming in on Byju, and we're seeing the ed tech giant Byju has actually slashed as many as 1,000 jobs over the past few days. The layoff comes at a time when the company is involved in a tussle with lenders amid challenging fundraising environment. The said job cuts have impacted middle and senior level employees as the company continues to widen its cost-cutting measures.
And the countdown has begun for Prime Minister Narendra Modi's historic visit to the United States. While PM Modi has visited US 6 times since 2014, this will be his first state visit, an honor reserved for America's closest allies and friends. The official visit is slated from June 21st, when PM Modi will lead the International Yoga Day celebrations at the United Nations headquarters. He's also slated to meet US President Joe Biden and several US CEOs over the next 2 days. The event is being seen as a milestone in the relationship between the two countries. Here's what the Ministry of External Affairs had to say about it.
We have had very good trade relations with the US, especially in the past 10 years or so. And it has been growing at a fast clip. But there are areas where there is an immense scope for further cooperation. For instance, the initiative on critical and emerging technologies, it has 6 focus areas. And one of them is about the supply chain for semiconductors. Of course, space is another one. Defense industrial cooperation is another one of those 6 areas.
I think post-COVID world is a very limited time span within which to examine India-US relations. I think the tide turned in 1991 when the economy opened and American companies began to invest into India with more seriousness than ever before. By the time it was 2000, I think that the economic discussion, the economic momentum had happened. 2008, 1998, under Atal Bihari Vajpayee, we made those 5 nuclear bombs, Pokhran 2, we were sanctioned for a while, but now all those things, the economic momentum kept the relationship going.
Are realizing that their common values in democracy and secularism and their common people-to-people links through non-resident Indians, the NRI community, are being manifest in common hard-headed realist interests, whether it's China or supply chain management or high tech. finally there's a convergence of values with interests. My concern about the visit is that it gets the considerable attention it deserves in the United States.
This time, it's going to be a very less scale or subdued kind of event as compared to what we have seen for last few years. And that's because of the Prime Minister's scheduling conflict. Actually, in January 31st, we got an indication that Prime Minister will be coming and can we do a large event in Chicago? And we did book for the Prime Minister United Center, where the Democratic Party's convention will be next year. And that is almost a replica of Madison Square Garden.
Let's move on. At Times Network's group editor Navika Kumar spoke to Taranjit Singh Sandhu, ambassador of India to the US, on PM Modi's visit. Let's listen into the excerpt.
Minister's visit to the United States was a testament to the enduring strength of our partnership. In the United States, relations with India have had bipartisan support, whether in the US Congress or in the White House. You would remember Prime Minister Modi's historic address to the US Congress in 2016, where he spoke about overcoming the hesitations of history. I have been witness to this transformation, having dealt with this relationship for nearly 25 years. From a time when our relations were colored by Cold War politics, India-US partnership has indeed come a long way, built on shared democratic and pluralistic values and connected by linkages of a large Indian-American diaspora. If you ask me, what has led to this transformation? I would say increasing trust in our relationship. In the US, we see a very close friend and a strong partner who is critical to transforming the dreams and the development aspirations of 1.3 billion people into reality. On the India-US ties today, I would like to make 5 broad points regarding what makes this partnership of bilateral and global significance. 1, India-US relationship is people-driven, people-centric. People like you set the benchmark. Your aspirations guide us, and we need to live up to your expectations. Our real success is measured by how quickly and how effectively as governments we are able to match your expectations. And in this, industry, civil society, intelligentsia, strategic community, and fora like PAFI all have an important role to play. 2, India-US relationship creates huge positive advantages for the world. It is not just in the interest of India or US alone. A stronger India-US relationship is in the interest of the world. It brings with it global good. For example, when we combine US technology and India's manufacturing power, we make a huge difference. Given the true potential in this relationship, I feel there's a lot that remains to be achieved. And each one of us here has a role to play in transforming that potential into reality. The immediate priorities in this partnership can be grouped in 5 baskets: healthcare cooperation, the energy partnership, particularly renewable energy and climate action, the knowledge and education partnership, the tech and innovation cooperation, including cyber, digital, and startups, and the defense and strategic partnership. Each of these fields represent not only areas of G2G cooperation, but expanding economic opportunities. We can go deeper into some of these during our interaction. Now, before I conclude, I just have a thought to share. Given the broad canvas of our relationship, it's always important to look at the big picture. We need to have a broad vision. We cannot afford to work in silos or look at things piecemeal. All that we do should be building blocks of a large canvas, and that should be the guiding principle for way forward. Friends, you and I belong to a rich tradition where father of our nation, Mahatma Gandhi, taught us, in a gentle way, you can shake the world. India and the United States are destined just to do that for a richer, safer, stronger, and better world.
All right then, and ahead of Prime Minister Modi's state visit to the US, focus is on the India-US bilateral trade. My colleague Sharad is here to explain how the bilateral trade between the two nations will receive a big boost from the Prime Minister's visit. Sharad?
The important meet is coming up this week, and do remember that USA is India's largest trading partner, and of course China comes in second with trading volumes of roughly $114 billion of trade. Now the important thing is almost $28 billion of trade is actually in a surplus mode when it comes to US. And lastly, Prime Minister Modi would be actually meeting the top 20 CEOs of the companies in USA. Now do remember that India-US trade ties, if you look at it, now let's do it segment-wise. For the defense, a joint production of G414 jet engines is expected to happen. And also there are partnership expected, especially in the maritime operations. And this was very sure during the Quad meeting. Apart from this, also advanced defense and tech cooperation would be in focus. Now moving ahead, let's focus in the space segment. Over here we look at it, there is a collaboration expected in the key areas, and these include planetary defense. Interestingly, there is commercial space activity and also human space flights. Now apart from this, also looking at the communications part, as earlier it was stated in the meet, 4G and 5G tech stack would be in focus, and also the deployment of the entire 5G technology in India, that would be there, especially in the infra part as well as the technology segment. Now do remember that there is the semiconductors part as well, where the Micron is expected to involve a large announcement of investment in the Indian markets. Now do remember it's a semiconductor manufacturing company which is called Micron.
All right, thanks Sharad for all those details. But with that, welcome back and thanks for staying tuned to Market Cafe. Now, in its largest ever order in the history of Airbus, Indigo has placed a record-breaking order with manufacturer Airbus at today's Paris Air Show. The airline ordered up to 500 Airbus A320 family aircraft, making it the biggest order in history. Remember, last week Indigo's top boss spoke exclusively on ET Now on speculations of the mega order. We will get you an excerpt of that conversation. But for now, let's go across to my colleague Samir to understand the contours of this deal. Samir?
The domestic carrier, having a strong market share of more than 50%, has placed a firm order of 500 Airbus A320 family aircraft. Now, these 500 aircraft are going to be delivered from year 2030 to 2035. And if you see the larger picture, Indigo will be having a fleet size of 1,000 aircraft by the end of year 2035. Because earlier Indigo placed an order of 480 aircraft, and currently the airline is operating around 300 aircraft. Whereas these 480 aircraft, the total delivery is expected by this decade end, that is by the end of year 2030. So Indigo will be having a fleet size of around 480 by year 2030, and then these 500 additional aircraft by the end of 2035. Now with this large fleet size, the Indigo is looking to have a strong presence not just in the domestic market, but also in the Gulf region, in the nearby regions as well, and also having a strong code-share partnership with other international carriers. Now, these 500 Airbus A320 aircraft includes a mix of A320 Neo, A321 Neo aircraft, and A320 XLR aircraft.
Okay, and keeping it with the aviation sector now, with this record aircraft order from the India's largest budget carrier, how do things actually change in the aviation sector? What are the industry dynamics at play? Let's go across to my colleague Sumit, who's going to tell us more in details about this.
Indigo is the largest player with over 60% market share. Indigo has to maintain their dominance. Air India is coming fast. It's now owned by Tata Group. So it's no more as that entity which was owned by government at one point of time. Air India has ordered 470 aircraft. So Indigo has beaten Air India in orders. So the overall, when the overall bounce back has happened in terms of COVID, post-COVID traffic, and that's really the pie everyone is looking at. From there, Indigo is clearly going to have a larger pie. Also, Indigo is expanding overseas in a negative way. Recently, it announced its plans to go to Africa. Now it's going to Tbilisi in Georgia, also to many other locations. From that point of view, the A321 XLR, which is long-range aircraft, will be of use A320s will help it dominate Indian market, but A321 XLRs will help it go to overseas locations. So it has inside clearly the domestic market as well as global market.
And speaking exclusively to ET Now on June 16th, Indigo Airlines top boss Peter Elbers spoke about the airline's growth plans in India and how it plans on growing network in the country. Listen in.
Basically starting from one flight a day to today over 1,800 daily flights, and last year we welcomed on board a total of 86 million customers. I think where Indigo has been standing out is a very consistent customer promise, and we deliver upon that customer promise every day. Courteous and hassle-free service, affordable fares and on-time performance. And with the expansion of our network and our portfolio, really also adding there an unparalleled network. And that combination in itself has helped Indigo in this, what is indeed a brutal industry when it comes to the aviation industry. Today, I would say, or more recently, coinciding and going hand in hand with the economic growth of India and the further economic potential, we're very upbeat on the outlook for the Indian market.
And Bhantesh Sabarad, the independent market expert, shares his views and insights on how the market may react to this news. So let's go across and listen in.
You should understand that these orders are something which are not something that really excite the market. Let's look at the numbers again. The Indigo airline has currently an order book which is outstanding, which they are yet to get deliveries of roughly about 500 odd aircraft, 477 to be precise. So as we talk today, they still have 500 aircrafts order on Boeing, and they have now ordered another 500 odd more, taking the tally to overall 1,000. And the deliveries of both these combined should complete somewhere around 2035. Although I would reckon my calculations would say it will be 5 years later than that. That means some 15 to 17 years later down the line will this entire order get executed. So why should an investor in the airline today be very excited? Most of the investors today in airlines look for profits to be looked at in the next 1-2 years. So beyond a 2-year visibility or a 3-year visibility, I doubt whether we have really entrenched investors who are looking at an 18-year, 20-year kind of investment horizon, particularly in airlines.
All right, that's the word. Market expert coming in on Indigo. But with that, let's quickly slip into a short break. But don't go anywhere, as on the other side, we'll give you more stock-specific news and brokerages to watch out for.
Welcome back, and you're watching a Market Cafe on ET Now. We're clearly seeing that the SGX Nifty is seeing a bit of a further fall coming in. Now it's down 0.4% in trade. So clear indication that now we are going to be opening maybe more on the negative side than a muted start for the Nifty. Let's move on and bring on board Ansh, who is here as always to tell us which are the stocks that we should keep on our radar at this morning. Ansh, very good morning and take it away.
Good morning, Vinny. So Pidilite would be the first stock in focus for today's trading session, as company has acquired 51% stake in Pidilite MEA Chemicals. This increases their ownership from 49% to 51%. Well, this gives them the complete control and authority over its subsidiary. Apart from this, Venus Pipes will also be in focus, as company had suspended its operations at the manufacturing plant, which is situated in Gujarat, from 15 June to 18 June. Company has now said that resume the operations starting from 19th June. Moving on, IT has signed an MOU with TCIL and CDOT to synergize their research and development initiatives. Hindustan Global Solutions has finished its buyback of 60 lakh shares at the price of 1,700 per share. Sun Pharma has received approval from Health Canada for acne treatment cream. Lastly, Canfin Homes will be in focus, as company plans to raise 4,000 crore through NCDs. So these are the stocks that you can keep in your watch list.
Thanks, Ansh, for that list. So keep an eye out on all these stocks buzzing in trade today. But Lisa also joins us this morning with all the stocks that brokerages are keeping their eye out on. And Lisa, take it away.
Well, yes. Firstly, on Indigo, which can be in spotlight today on the back of a mega order won by the company from Airbus. And on the back of that, Morgan Stanley has released a note on Indigo. They have maintained an overweight on the stock at a target price of 3,126 per share. And they say that with the new aircraft order, they have planned an expansion of between 2030 to 35. Well, Morgan Stanley says that the market share and margin trends that have been the two main key drivers for the company, and the bulk aircraft order as well as the 6-year operating leases that have led to a low fuel cost for the company. The next on Buffett, they have released a note on Z Entertainment. They say that they expect the revenue growth to be slow on the back of slower ad and subscription. The continued investigation by SEBI that has remained an overhang on the corporate governance of the company, and this has also caused a risk to the merger with Sony. So Buffett has a no rating on the stock pending clarity on the merger. And lastly, on Anand Rathi, they have released a note on oil and gas sector. They say that Indian refiners GRMs that could come at a premium over benchmark. And as we know that we are getting close to the election, so that will also result in the lower petrol and diesel retail prices for the oil and gas companies, which can lead to some downside. And they also see more volume growth across segments. They have hiked the target price for Chennai Petroleum, MRPL, as well as Gujarat Gas, with a major hike coming in for Chennai Petroleum as well as MRPL of around 14%. So that's on the brokerage radar for today.
Okay, Eliza, that's on the brokerage radar, but do stay on with us because obviously we have Coforge that's going to be in focus today as well. As there was an analyst meet, management met with some of these analysts. What is the key highlight that we're getting in terms of costs, margins? What have they guided over there from this analyst meet? What is the update?
Yes, absolutely. Coforge had in its analyst meet the management. They highlighted important takeaways, and here is it. So they say that the focus will be on execution at all costs, but in the second half of FY24, a significant rebound that remains unlikely, and even the margin is likely to remain as guided. But in the long term, they are quite positive in the next 5 years as they see Coforge doubling its size and becoming a $2 billion company. Well, this will be on the back of deeper partnership, 25% growth coming in from there, 15% will come from new verticals and acquisition, and balance will come from the existing verticals. They also said that the growth in the cloud segment, that will be through hyperscalers, and the company is investing majorly in that. The company will also be adding a new vertical as it is a part of their 5-year plan, and that will be a public vertical which will be based out in India, and the company will make an announcement in the next 1-2 quarters for that. And also the company sees its margin growing at around 100 to 300 bips as the company size doubles. And also on the AI being the buzzword, they see it as an opportunity more than a threat. So these are the key takeaways from the Coforge analyst meet.
All right, thanks Lisa for all those details. Keep an eye out on Coforge and trade today then. But moving on, let's focus on key deals that will be in focus today, and Sharath joins in with all the details. Sharath?
Well, yes, 2 important block deals and 1 QIP issue has opened, and the first one in focus would be Timken India, where the promoter Timken Singapore is expected to sell 8.4% stake in the company, which would be valued at roughly 1900 odd crore rupees. Now the selling price is coming at almost 14% discount to the current market prices, and do remember promoter Timken Singapore has 67.8% stake in the company, and this is the first time the promoter will be actually offloading their shares. Apart from this, the second stock which would be in focus would be HDFC AMC, and over here the block deal is expected to happen where Aberdeen will be selling its entire tranche of investment of almost 10.2% stake in the company, which is valued at more than 4100 crore rupees. Now the selling price is expected to happen with a discount up to 5% of the current market prices, and Nuvama expects that there would be an inflow of almost 132 odd crore rupees because of this deal. Apart from this, so do remember that recently Aberdeen had exited HDFC Life Insurance with almost a 15 times return from its JV partnership since its investment in the year 2000. Now the third stock which would be in focus would be Ether Industries, where the QIP issue has opened up. Now overall the floor price is set at 985 rupees per share, which is roughly at a discount of 1.4% to the current market price, and the board has already given approval to raise 750 odd crore rupees. So a lot of action happening in the block deal and the QIP space.
Okay, thank you so much for that, Sharath. But let's move on and talk about IIFL Securities. Now, tracking the regulatory actions, SEBI has actually barred IIFL Securities from adding new clients for 2 years. The order follows probe into violation of SEBI's rules by the brokerage. Remember, SEBI was probing IIFL Securities for mixing its own and clients' money, and now SEBI's probe found a violation of the regulator's rules with the provision of 1993 circular. We also had a release coming in from IIFL Security overnight where they are saying that yes, this order pertains to an inspection carried out in different periods during April 2011 to Jan 2017, which was prior to the issuance of the enhanced supervision circular, which was dated in 2016 by the SEBI. Now, furthermore, what they're saying is that it may be noted that the orders does not affect the company's existing business with the existing clients, and the company is in the process of preferring an appeal against the said order before the Security Appellate Tribunal. That's the word that we've got it in, and the company has also has always met all the obligations of the exchange and clients on time. That is what the highlight and clarification is also coming in from IIFL Security. So we'll keep an eye out on what more updates coming in from both sides.
All right, keep an eye out on that stock today then. And life highs may elude Nifty, but there is a lot of stock action on Dalal Street. And we spoke with some of the managements including Bajaj Auto, Shriram Finance, Titagar Rail and Skipper, all of which were abuzz in trade. So listen in to what they had to say.
Subsidies which are going for fuel, those have been removed. Again, this has caused an increase in petroleum product prices, which is also in the short term going to impact the purchasing power and lead to inflationary issues. But again, it's a recognition of the reality, which is all very good, because we are in it over there for the longer term. We are not looking at it month to month.
The TP has been with us for quite a long time, and they have every scheme or every fund has a limitation. And I think this particular fund, they have been, I think, with us for more than 7 or 8 years, and they have to sometime retire the fund. So, and that's the reason. So, however, we are quite happy with the TPG, and definitely we expect them to partner with us in our future ventures.
There is a big kind of thrust on the railway infrastructure, on the urban mobility infrastructure, both on the passenger side and on the freight side. So with that, we are in a good position to be able to maintain and grow this position that we have created for ourselves in this market. We are long-term debt-free. So considering that, and considering that we just got in a very marquee investor to whom we made a preferential issue of about 300 crores of equity shares just a few days ago. So we believe that, with this capital raise, with our balance sheet, with the cash that we are generating, funding of the capex is not going to be a challenge.
We have been very bullish on the overall transmission and distribution demand scenario in the recent years, thanks to the push in renewables. The domestic market, which has not been so exciting for us for the last 4 or 5 years, we are seeing a good revival in that in this year. So this 700 crores order coming in from Power Grid Corporation is a testimony to that. And we are expecting more business to come in from the domestic markets as well. And yes, all orders with thanks to the good demand scenario definitely are margin remunerative for the company. We are expecting a 12 to 13% EBITDA margin for new orders as well.
Okay, and with that, viewers, we're absolutely out of time on this edition of Market Cafe. As of now, SGX Nifty 18,808 is what it's indicating for the Nifty. Keep an eye out on that. That's down almost 0.3%. But goodbye from Sneh, myself, as well as the team who put the show together. Don't go anywhere. The market's built.